April, though, is the Financial Literacy Month, and today we're bringing you details of an important annual survey from Schwab and Ariel Investments, survey tracking the behaviors of black and white investors, and this year finding that the higher-risk plays are growing in popularity, especially among younger black investors. Joining us right now with more details on this is top money manager and veteran value investor John Rogers, co-CEO and chief investment officer at Ariel Investments, also Kelly Johnson, portfolio manager at Schwab Asset Management. Good morning to both of you. Walk us through the highlights of this, John, because it's pretty fascinating stuff.
Well, it's really important what's been happening. But one of the key highlights for us, or really kind of a little bit of a low light, is that African-American investors have getting into the markets late, taking higher risk as the market has exploded upwards over the last few years. And while things like cryptocurrencies have just gone up and up and up, we've been joining that chase the same way we did when the internet bubble occurred, getting in late and chasing the higher risk investments.
So, Kelly, how do you change that dynamic?
Well, the most important thing is education. What we're finding from the survey is a lot of evidence that both black and white Americans don't really understand what they're investing in. For example, 40% of both cohorts came in as admitting that they don't really understand their investments. So that's the main thing. The other thing is, as John alluded, we're seeing a lot of interest in newer investments such as crypto and NFTs among African Americans. And we feel that that's a reflection of the broader cultural movement and given the buzz around these instruments. And so we want to be able to leverage that interest in investing from all these new investors and provide client education so that they don't get into trouble.
Good thing or bad thing that's where the interest lies? And can that interest, to the extent you think it's a bad thing or whatever it is, can it be converted to some degree into education and understanding about other parts of the market?
Well, I'll jump in and say what I worry about is when you jump in late and you get crushed when the inevitable happens, then you're going to be gun shy about getting back in the markets. So I think it's something to be really quite worried about, and that is why investor education is so important, why we have to have public schools, getting involved, teaching young people about the markets and the value of long-term investing, not speculation.